Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 867A, and today's date is January 14th, 2016, and the title of the episode is, As China Dumps More Treasuries, the Economy Continues to Slide into the Abyss. Let's get right into the economic collapse financial news. Now, we're going to head out to Canada, and I remember many months ago, maybe even more than a year right now, where they were out there talking about Canada. The real estate market was incredible. Canada has shown great improvement, incredible recovery, and how fast things have changed for Canada. And we're starting to see that inflation is starting to hit Canada right now. Actually, the currency in Canada is collapsing. And Canada's imports around 80% of its fresh fruits and vegetables. And the loonie is sliding, which means that prices are going up. And with many of the lower income households, it's going to be very difficult to buy these types of foods. And with more and more people getting laid off and losing their jobs, it's going to get even harder. And we see there's a lot of layoffs in Canada at this point. And what's happening is exactly what we thought was going to happen in every one of these private Western central bank countries. The system is ripping itself apart. The system cannot be sustained. The debt levels cannot be sustained. And the private Western central bank economies, they are one gigantic bubble created by the central bank. And the people in Canada, I mean, they might be looking at $15 frosted flakes if this continues. They might have to pay $8 for cauliflower. I mean, last year fruits and veggies jumped in price around 10% or so. And if this continues, and if they stay on this course, it's going to be horrific. Now, it's not just going to be Canada. It's going to be mostly every one of these private West central bank countries, because we're all interconnected, and all of these countries are controlled by a private Western central bank. Now, here in the United States, we're seeing a trend which is now turning, and that is continuing jobless claims. And what we're seeing at this point is that the trend was down until we hit around October, November. And then all of a sudden, initial jobless claims started to trend upward. And it's continuing. Now, what's happening right now is more and more people are getting laid off. Companies are laying off. The companies that reported they were going to start laying off back in August are now doing it. These people are now hitting the market. They can't find jobs. They're applying for initial jobless claims. And at this point, we're starting to see that these claims have surged by most since 2009. And we've seen this many, many times before, where initial jobless claims have dropped right before a major recession/depression. And if we go back in time, we've seen it in 1974 or so, 75. We've seen it in 1981 to 83. We've seen it in 1990 to 1991. We've seen it in 2000 to 2001. We saw it in 2007, 2009. And here we are, 2015. And we're at the same point. Actually, it's much, much higher at this point, which tells us that this crash is going to be deeper and scarier. Now, we're getting more reports that retail has not been good this holiday season. And Best Buy is out there saying that sales fell by 1.5%. And they're saying that their sales of their mobile phones, their computing products, fell by 7.2%. This is the main part of their business. And they're saying that their revenue has also fallen by 3.6%. And they're saying the holiday season was just a complete bust. And we're starting to see this from H.H. Gregg. We saw it from Macy's already, and there's going to be a lot of stores reporting in saying this holiday season was a complete and utter disaster, which means we're going to see more and more store closings, and we're starting to see that already. Heartstrings, they're going out of business. 30 stores going to be closed down. Kitson's, 14 stores. Barnes & Noble is going to close another 10 stores. Hallmark is closing 5 stores. And this trend is going to continue. I mean, if we look back in 2015, we're talking about thousands upon thousands of stores that are closing throughout that year going into 2016. These are new store closings. So that means more people are going to be laid off. That means there's going to be more commercial real estate on the market. And it does not look good going forward whatsoever. Now, the fourth quarter is going to be one of the worst earnings seasons since the third quarter of 2009. The S&P 500 profits are expected to have dropped by 7.2% in the fourth quarter, while revenues are expected to fall by about 3.1%. This is representing the worst U.S. earnings season since 2009, and a third straight quarter of negative profit growth. And we see from everything that's going on that things are just sliding faster and faster into the abyss. The Baltic Dry Index, it fell again to 383 points, down another 11 points. A new low, everyone. I mean, it is just getting worse and worse as time goes on. Now, I see all over the net, everyone is picking up on what Obama said, where he said that if you do not believe me, if you don't believe the economy is doing better, you're a fool or you're peddling fiction. And I see Gerald Celente out there screaming and yelling about it. I see others screaming and yelling about it. And we've been tracking the economy for quite a while. We've been reporting on things. And again, every time we hear things from Kay Schiller or from the National Association of Realtors, remember, they're reporting things 2-3 months behind. We're reporting things that are happening right now, what we see right now, and what's going on right now. So it takes a little time for these people to catch up to what we're doing here. And you have to remember, everything that we're seeing right now is going to accelerate. This is not going to slow down, reverse itself. The economy is all of a sudden going to do better. But Obama is out there trying to convince everyone. And again, if the economy was doing well, you don't need to convince everyone. Because when the economy is doing well, people get jobs. The jobs are well-paying jobs. You feel secure in your jobs. And you take that money that you're making and you go out and you spend it in retail. And retail then will expand. If retail expands, what happens? Well, the manufacturers, the factories, they will produce more because people are demanding it. If the manufacturers, the factories are producing more, guess what? They have to order more raw material. That means the Baltic Dry Index will increase. So we're not seeing this at all. And we know that the government completely manipulates a lot of these numbers. And he was out there citing that, that 14 million jobs were created since he took office. And of course, he failed to mention that he spent about $8 trillion worth of these funds, which is a 77% increase. And this was throughout the 7 years. And if you really take the calculation of how much was spent, and you use basic math, and I'm not talking about the Common Core math, I'm talking about real math, you see that it took $600,000 in government debt for every single job created. Think about that for a second. $600,000 to create every single job. Now, of course, all these jobs they created, a lot of them are government jobs, and a lot of the jobs he's talking about are part-time jobs. the high-paying good jobs are no longer to be found, and more companies are laying off. And we have to remember those people that have fallen off and are not counted anymore. 94 plus million people. Now, the president is saying that everyone else is making it up, that we're all fools, but the government's own numbers show that they are completely insolvent to the tune of 18 trillion. And that's what they're telling us. Many of the calculations are saying it's around 200 or so trillion. The annual reports for the Social Security Trust Fund show that they are rapidly running out of money. The Federal Reserve's own balance sheet shows that it is undercapitalized, with a net capital less than 1% of total assets. The Census Bureau data shows that earnings for middle-class Americans are stagnating. The Labor Department numbers show that the number of Americans who have dropped out of the workforce hasn't been at this level since the Carter administration. The USDA figures show that the number of food stamp recipients is near an all-time high, while the number of homeless children in America is at a record high. And all of this at a time when trust in government is near an all-time low. These are facts, not fiction. So we can say that the president is actually peddling the fiction. We see a lot more strategists are out there and they're throwing in the towel and they're saying things are going to get a lot worse. And we've seen since the start of this year that the market has been down 1,200 or so points. I mean, this is just absolutely awful. And we've seen the market shoved up today by the high-frequency trading team, the plunge protection team. And it came out of nowhere. I mean, if we look, Asia was down, the Europe was down, but all of a sudden, in the morning, we shot straight up by a mysterious purchaser of stocks. Now, the Fed is already out there, and they're backtracking already, talking about lowering the interest rate, talking about QE4, and we see at this point that this whole rate hike was a signal to show that they're ready to bring down this economy. They're just waiting for the right moment. And they're talking about QE4, they're talking about 0% interest rates to get it in everyone's mind that if the economy should fail, they will have to do this. Now, are they saying that from everything they've done, it's going to fail? No, they're saying if it does fail, if the economy doesn't do as well as they thought, they will have to do this. Now, what will cause the economy not to do as well? Well, maybe some type of an event. That's what they're talking about. They're getting everyone ready and prepared. Now, as the economy continually collapses, and we realize that Russia and China are decoupling from the dollar, setting up their own oil type of benchmark system where they're going to price everything in yuan or rubles. We see China, instead of going through different channels of selling their treasury bonds, they did this. They did the latest sale right out in the open, first time on record, and they sold about $187 billion worth of treasuries. They're slowly dumping the treasuries, trying to get out from under the U.S. The same thing is happening with Russia, and they need to do this very slowly because if they dump them all at once, it will be a complete disaster, and they know this. So they're doing it very, very slowly, trying to remove and separate themselves from the West. And as we move forward into this year, everything is just going to get worse and worse. It is not going to get better. And we're going to have more news of more economic downturns. And this is why you all need to get ready and prepared for what is coming. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.